let's start with the Asian asset sale. Why did it fall apart?
You know, probably a lot of reasons. It's a really complex deal. It's a cash-rich split-off. They're trying to unwind a bunch of more than one Asian asset, and they're trying to do it in a tax-free way. I won't bore viewers with the complexity there, but so you have a lot of buyers, or the buyers, the sellers, a lot of different moving parts. And of course, people are disagreeing on price. You got to think they're disagreeing on price.
The whole thing comes down to the way the tax-free spin-off. It's being done for tax reasons, not for operating or commercial reasons. And whenever you have a deal that is totally predicated on, they have to go out and buy some other assets that kind of jam the thing with. Whenever you have a deal that's being done, basically to get around the tax code, in effect, then there's no good business reason for doing it, and that's why these deals often.
Or are they also hoping for some cash to perhaps go for acquisition?
They don't necessarily need the cash. Okay. I think some analysts say that, well, this would simplify the business model and they'd be able to concentrate on the core business. And I don't want to make light of that. This is important. The core business is in a lot of trouble. But it's not like they're getting a lot of pressure, I think, from investors to actually unwind this. I disagree.
You got Dan Loeb who's doing a proxy fight, jumping up and down.
I don't think Dan Loeb's necessarily angry about them holding on to the stake. This is a good stake in a solidly growing company. Yeah, if they hold on, the valuation's only going up. There's no
the business itself,
pressure necessarily.
Yeah, but what you're owning,
we're just talking about the Asian assets, right?
I understand, but when you own a share in Yahoo, you're owning an operating business plus a minority stake in another business. I mean, it's
okay. I mean, if this is the Chinese Facebook and you're getting in at 30 billion as opposed to 100 billion, I mean, you might as well ride it.
First of all, Alibaba is not the Chinese Facebook. It is a B2B portal. I can't believe I even used that phrase.
Maybe not. I think
it is not the Asian Facebook.
They'd be fine dumping it if they got a good price.
And here's the 5-year stock chart of Yahoo.
But I don't think there's as much pressure.
You can't tell anything from that. Right. But look, the stock had been bid up to close to 20 on the back of a deal happening, and then the stock's kind of falling off.
But if Yahoo doesn't think they can get the price they want, if Yahoo doesn't think there's not the pressure to close the deal, I don't think.
Right.
But meanwhile, the other news, of course, is Dan Loeb launching his proxy fight.
Right. You mentioned
he's not happy with the new directors.
Shareholder,
not happy with the new directors that are on board. He wants to bring on 4 of his own, including himself, and Harry Wilson, who was the restructuring expert who helped turn around GM.
Yeah, he was. By the way, Harry Wilson was an ex-Goldman banker who ran to be comptroller of New York State. New York State, New York City. Yeah, somehow he lost that. I can't believe the guy lost, but he was a Republican. So
also Jeff Zucker from NBC Universal, another one.
Yeah, Jeff Zucker ran NBC.
And former MTV Networks executive Michael Wolff. So
yep. So you got a lot of media experience, which is they're not happy. I mean, look, Dan's not happy with the 2 probably, right? He's probably not happy with the 2 board members that they just appointed. So
where are we going from here then? We've got the whole thing asset sale falling apart.
Yahoo's a dead man walking. It's like a company that we talk about all the time that has very little meaning outside of those poor people who still happen to be shareholders in the company. I mean, it's not impacting the technological landscape. It's not innovating something. It's going to lose a lot of traction in the press when Facebook goes public and all this thing. It is a dead man walking. And the only reason why we're really talking about it is because we don't have a Facebook story today. Is that brutally cynical?
But I think it's kind of more or less the truth. But you could say, look, if they could find the right recipe to turn the business around, it's trading for nothing. It's trading for close to zero.
I can't even believe you're saying that. I mean, how many years
did I say I was going to buy the stock, Newmark? I'm just saying.
By the way, I'm
a
smart guy.
Can they come back and say
I don't think a smart guy. It's like you can replace CEO after CEO. You can replace the board time and time again. As long as the operating business itself is going to remain moribund, there is no future for the company.
But we're saying moribund. The thing is, Yahoo isn't as bad as, say, AOL. AOL is moribund.